we start off with Trump tariffs, the impact that it's really had or will have on India. India could be staring at mass layoffs across key sectors, key export sectors, after America imposed 50% tariffs on Indian goods. Textiles, gems, jewellery, shrimp, carpets, leather, auto parts, industries that employ millions say that they're now bracing for some devastating losses and large-scale layoffs. In the garment trade particularly, orders for the 2026 season are already disrupted. Exporters warn of cash flow crunch, and many of them have already halted production, they claim. Many fear overseas buyers, who were their clients for so long, could very well shift to rival countries like Vietnam and Bangladesh. The shrimp industry, which sends nearly half its shipments to the United States, is now already cutting jobs. The labor-intensive sector supports nearly 2 million workers there. In fact, literally people who peel those shrimp shells, thousands of them who are employed just to do that, they might lose jobs. Insiders say more than half could directly be hit. In gems and jewellery sector, the blow is equally sharp. The US is India's biggest buyer there. And with the festive season around the corner, India is hoping that it could absorb the shock. But how far can it? Can domestic consumption really absorb this shock that the US is given with its tariffs? Now, the dollar city Tiruppur, India's knitwear hub, low margin units have already paused production. We hear nearly 150,000 workers, or up to 2 lakh workers, could very well lose their job if this standoff prolongs. Now, what makes India's case worse here is that its competitors, like India, apart from India, of course, like India, Brazil has 50%, but we are looking at many other countries like Vietnam, Bangladesh, China. In fact, the list is on your screens there. Look at the comparison. Tariffs that India has 50%, you have Bangladesh that has 35%, China 30%, Indonesia 32%, Vietnam 20%. So there you have it. Malaysia 25%, Sri Lanka 30%, Philippines 20%. So comparison to other countries, India is very steep. The government, though, of India insists that relief is on the way, promising an economic package once industry reports are submitted. In fact, Finance Minister Nirmala Sitharaman, we hear, has assured exporters that there will be no layoffs, and they're waiting for a detailed report. They've asked for industry experts to give a detailed report on how this could impact them, what kind of benefit they would like from the government. Of course, a lot of that assessment is happening as we speak now. Officials are also looking to open new doors. The Indian government is looking to open up free trade pacts with Japan, Australia, UAE. Prime Minister Modi is in Japan currently, and he's exploring options, possible way to cushion this US hostility. But across India's export-driven economy, the mood is, of course, grim right now. Jobs at risk, factories slowing down already, competitors getting a head start with lower tariffs. The trade war with United States has really left Indian industry in the most vulnerable and uncertain phase that we've seen in decades. Joining us for a little more in detail on job loss threat at this point, especially for the lower rung workers, Dilip Chenoy, former Secretary General of FICCI, joins us. We have Shubhomoy Bhattacharjee, consulting editor with the Business Standard. Thank you very much, both of you. Your take on the mass layoff threat. Dilip, I'll start with you. Mass layoff threat, India's export hub already slowing down. We hear most of the companies who have already sent their shipments are safe because, you know, this interim period, they won't be slapped with tariff. But those who are yet to send their shipment and work had already begun, they're now devastated because that's the overhead cost that they have to live up to with all that money spent on inventory now at a standstill. You know, losses from every corner for them, and no relief. Government says that we are going to aid you. We will infuse some life into you. They will get some financial packages, I assume. But how long, how far, and how much will that come in? We don't know. So mass layoffs, and especially in the lower rung of the economy.
So, I think in your introduction to the topic, you actually talked about the textiles, gems and jewelry, and the shrimp sector. So, looking at from the outside, one can only echo what the industry associations and the experts in these sectors are saying. So, first of all, I think if you take textiles, they're saying that the tariffs are steep. The markets and the states that are being impacted are Tamil Nadu, Punjab, Gujarat, right? And they're saying that there's a flagging of halted orders and job risk, right? Of course, in the gems and jewelry sector in Ludhiana, some of the CI leaders have warned that it could actually lead to the death knell of that industry. And similarly, Coimbatore and Tiruppur, the SEMA body feels that I think there's a bookings collapse here. And even in Sholapur in Maharashtra, which is a terry towel hub, they say about 40,000 jobs are at stake. Similarly, if you look at gems and jewelry, a lot of things coming out from, let's say, Surat or other centers where they are uh, actually halting
Yeah.
production. And since these industries allowed seasonal workers, right? And to your question about what rung of workers are affected. So in the seasonal, the entry level jobs and the specialist jobs that are there because of the season, they are being impacted here. But there's something actually very interesting happening in this sector. Typically, the Diwali and the Indian festive season actually comes in late
That's
October and early
that's
November.
precisely what I even
This year,
said. What I even said. Can domestic consumption absorb that shock?
so it's interesting. There are two sets of things that are happening because given the cycles and the Christmas shopping and the festive shopping in gems and jewelry and textiles, a lot
Yeah.
of these orders were here. Now, are those fashion trends the same that are in India? Can they look at switching,
Correct.
something to domestic and also looking at new markets, right? So you will see, like EU, India UK FTA was not in place. Now that's in place. If we can quickly do something with the UAE and EU, and of course, like yesterday, we were discussing in another context, do we actually route our trade through other areas? So yes, there is, according to the different associations, there is a kind of halting of orders and therefore reduction of production. So they can, industry could do various things, instead of running three shifts, shift to single shifts, don't do overtime, try and preserve, the key workforce going forward. But it is going to affect earnings of workers in some manner. And very
In some
interestingly,
manner, I've been reading up extensively. I read that the diamond sector, they've already started laying off people. Nearly 1 lakh
yeah,
fifty
yeah.
thousand to 2 lakh jobs are currently at the brink. And among that, and this is feared that they're going to lose. That's the number that will lose jobs. But the layoffs have already begun.
Yeah, so the numbers could be even higher than
Yeah.
that. This is like a seasonal thing, and this was, advance orders for the US festive season. So you're seeing that layoffs happen. But, you know, I think it's very important to understand we did not normally have a playbook. But because of COVID, right, and the Atmanirbhar packages, we actually have a playbook that the government can quickly resort to in terms to address, the challenges these
Example
specific
of a playbook,
sectors.
right? Dilip, I want to know the example of a playbook because I know for a fact that India did not expect this. Let's be honest, we did not expect this. We did not expect 50%. What if it was 30%? Could we have still sustained the blow? Because I see
I
China
mean,
being imposed with
we were okay
30%.
with 25. We said
So
that,
could we have dealt with 25 comfortably?
yeah, because it's actually the chart that you put up in relative tariffs to the other countries. So 25 was not bad. I remember
So
that
in
when we
terms of
had on this on
competition, suppose if we were selling garments to the United States, now they're going to turn to Bangladesh and Vietnam and whatnot. So you're saying in that sense, competition wouldn't have been much, would have been still
yes,
bearable.
would have not because the tariff charts that you showed, if you had 25, you would have been slightly lower than some, right? And you see, this is the higher tariff, but the next slide actually shows the other competitive tariffs, which is
Yeah,
36, 35, 32, 30, and at 25, you would have been lower than all of these.
yeah.
Right? It's only the additional 25 because of what they're saying of buying Russian oil and supporting Russia that has actually made us
No, but
uncompetitive
well, Jeffries
in this going forward.
Jeffries today has released a statement that it's less to do with trade and more to do with Trump's frustration that he wasn't given a chance to mediate between India and Pakistan. What an embarrassment for
You
him.
know, No, those are all different issues, but in the hard economic reality, what it is that we have this tariff staring at us. What could we do as a country? What could industry do? And how could government support? I think those are the key things we need to focus because there's a short term, medium term, and long term plan. I think and I think let Shubhamoy come in and then we'll talk what are some of the remedies that we could look at.
If there are remedies at this point, like I said, and I will have, of course, we have to be optimistic. We have no other choice, but we can't have false hopes either. We're looking at Vietnam hardly with 20% tariffs, Bangladesh with 30. Shubhamoy, you have competitors who will charge on this opportunity, and that's precisely what industry insiders have said, that they feared markets will be taken away by these countries who are probably have been waiting for this opportunity. And once you lose a client, hard to bring back.
Well, if clients move out and move in so fast, which means that they're highly elastic with respect to prices, then I don't think that's hard to bring back. Essentially, if clients are moving in that fast globally and moving out that fast, that means their demand is highly elastic. So in that case, of course, if you can be more productive, if I can be more productive, I can surely get them back. So that argument can easily be settled. Your other point about about what will be the effect I was listening to you and Dilip's discussion. That was a very good discussion that you're having about whether we would have been competitive even at 25%. Well, I have my doubts. See, even at 25%, what happens is we already have a lot of disadvantage domestically. Our production costs are high and other things. So even at 25%, we would not have stayed competitive.
Yeah.
So that definitely would have been a problem. Coming specifically to the textile sector, the government of India, I was just looking at the data. The government data says roughly about 3.5 to 4 crore people are engaged in the total value chain of the textile sector. Now that's a big number. If we look at what Tiruppur does, the total amount of employment in Tiruppur is about 6 lakh. Let's just focus on Tiruppur. Of that, 1.5 lakh going out of job seems, well, what I see there is essentially the exporters telling the government that, look, we have a problem. Nobody takes in people and immediately takes out people because that it doesn't work that way. But what the exporters are doing are essentially raising the the temperature, asking for a larger and larger SOP for them, which they're fair. That's after all, this is a situation, and they would obviously say that we would need that help from the government. So it's for the government and for the exporters to work out that what really is the extent of support that they would need. For instance, one thing which can surely be asked for is that if the support is being provided, will be provided, assuming that Tiruppur makes about an export of about 30,000 crore. Again, this is the government data, and I was just reading from PIB report. Makes an annual export of 30,000 crore. Of this 30,000 crore, they are saying 40% is to USA. So that means about 14,000 crore is out.
Yeah.
So then the support would be about 14,000 crore to Tiruppur, or about 10 to 14,000 crore approximately. Now, if that is the case, then the government exporters have to also ensure or offer that they will not then lay off anybody.
No, that is the intention. I highly doubt anybody intends to lay off people like that. The intention is to hold them on.
No, that's the point. Indian industry is not particularly great at sticking to its part of the bargain. And that, I think, is something which needs to be worked out very carefully, because what you're pointing out is absolutely right.
No, but you're giving me such big figures, 15,000 crores odd, and each sector will demand a big,
textiles,
boost.
Shrimp, gems and jewellery.
Which according to you, in what you're mentioning now, among garments, gems, seafood, leather, textiles, what's the most vulnerable, at least in the short term?
I'll tell you what, shrimp is the biggest, but shrimp sector, because the shrimp, almost the entire export goes to USA. But in shrimp, there is no estimate of what is the employment. Because frankly, it's the most unorganized sector. I've been there, I've seen it.
Yeah.
There's just no count. People come in daily, they do the peeling work, they do the sorting.
Yeah, lakhs of people we hear are just hired to peel those shrimps.
Yeah, absolutely. So, I've been there several times. I know that there is no count of the employment. people are paid piecemeal, on the piece
yeah.
basis, that how much hours they work, how much quantity of work that they move. So there, the government will have to be very careful about what is it exactly that these people are asking for. Like if we assume that the entire shrimp export is going to be hurt, then is there any way by compensating them, the employment will come back? Well, it's a very difficult question. I don't think it's going to come back. So there, the government strategy may need to be different. Supporting the exporters will not necessarily make them pay people. It's much better for the government to pay the people directly through other employment schemes, the NREGA and others, expanding those and providing the employment sub. So if the employment support to people in the very unorganized sector, you're talking about also of the leather exports, same problem there. There it may be better for the government to give people employment SOPs rather than looking at SOPs going through the industry and from there to the people. It will not work.
We were just, in fact, here at News 9, Shubhamoy,
yeah.
we have basically just broken a story a little while ago on India's GDP growth, a robust 7.8% in quarter one, financial year 26. So this, against all odds, due to domestic demand and domestic economy, we have grown. What does this speak of?
No, it also speaks of the fact that we'll also have to see that there was a front loading of the exports because the Trump tariffs were coming. So quite a bit of the exports has been front loaded, which is also showing up in the exports figure. That is also helped. But definitely that is not the only thing. As you're rightly saying, the growth is high. And in fact, I was looking at the SBI data, estimate of what is going to happen in this quarter, which is the most critical quarter there, the June to September quarter. And in that July to September quarter, in that quarter, they expect the GDP growth to actually hold up. And that's a very important thing, to something like 6.5%. Now, if that happens, despite the Trump thing, then I think that is a very major growth statement by the Indian economy. That the Indian economy cannot be flattened, and definitely forget about flattening. It is actually in terms of sheer numbers, and we were talking about this, I think, yesterday or day before yesterday, that the Indian economy is definitely in a much more robust position than has been given credit for. So therefore, the government, if you come back to the employment figure, I would say that what the government would need to do to provide succor to the people who lose their job will be to provide direct support, rather than trying to provide support through the industry. The industry support will have to be to see what can be given to them while they look for markets in other parts of the world, for the raw material cost, the holding cost of inventory. For that, what is the amount of support that they would need to do? And I understand the government is actually looking at it in that terms, which then makes sense. The employment support, lakhs of people losing their jobs, and the support of the industry cannot be clubbed together. That's my limited point at this point.
Okay. We also have Lloyd Matthias, investor and business strategist, also joining us on the panel. Lloyd, United States has done what it's done. Yet we're looking at our GDP growth numbers that's just come in for the first quarter at 7.3%. And that's really quite a, how do I say? It's basically a pushback or just a mirror to Donald Trump, that showing India's resilience. No matter what they try and attempt, India is on a steady footing. But I also said right at the start of this talk here today that we shouldn't have false hopes either, and shouldn't be pushing this false narrative that all will be well, because from the sectors that we've spoken to and gathered information, the prediction is devastating. Lakhs of people, 2 lakh odd in one particular sector, the diamond sector, could lose their jobs, 2 lakh and more in the textile sector, similar numbers in the shrimp sector. So we're a little worried that in the next 6 months, when the blow really trickles in, what's going to be our fate?
Thanks, Nabila. I think 2 parts. I think one, I think clearly this growth that's come speaks a little bit for the robustness and the resilience of the Indian economy.
Yeah.
The fact that over the last decade or so, I think 2 parts. I think one, India has kind of become far more robust. We already are a large internal consumption market, right? So unlike many other economies that depend largely on exports, I think in India, that blow is already softened by the nature of our economy. The second, in a very classical way, there was a time when our markets were very shall we say, very, dependent on foreign direct investment and FPIs, I think that has reduced dramatically. What we've seen is a lot of retail investors. However, I think you're raising a very critical point. I think the fact that this quarter's numbers have come well for the GDP ahead of estimates, I think doesn't guarantee for the next couple of quarters to be as robust. I think there is going to be a lag effect. I think some of the impact of the US tariffs, specifically in the context of labor, right? The fact that there will be a lot of unemployment adding on, since a lot of these are labor intensive sectors, is bound to kick in. So there is a danger that Q3 and certainly Q4 may not look as good as currently is. So there will be a little bit of a correction. However, I do largely agree with what Shubhamoy has said. I think one, the government has to focus on mitigating the damage to unemployment. The fact is, these are labor-intensive sectors: leather, footwear, garments, shrimps, gems, and jewelry. So I think one is some form of a direct kind of benefit transfer in a sense to ensure that these sectors where unemployment is big has to be kind of reduced. Two is, to some extent, some degree of working capital and also assistance in helping find alternate markets. I think one of the big, you can say, kind of, while it's not a death blow, I think it's going to force our exporters to start diversifying and looking at other options.
You
And I
have
do
some of
believe
the
there are opportunities
exporters,
there.
some of the exporters saying we're shifting operations to Botswana.
Yeah, so I just think, honestly, this is going to force our exporters to kind of look out of the difficult route.
But look
and
out
actually
doesn't mean
find
they
a lot
move
of
operations
markets.
altogether out of the country.
It's always going to be challenging. I know it's a short term, I mean,
Yeah,
it's going to
of
be a
course.
little
And the
difficult,
losses,
but sooner than later,
by and large, are for the ones with lower margins. These are big players who could still sustain. I don't know how they would, but it's a blow for everyone. But big players still, they're giving steep discounts, we hear. But the ones with smaller margins are the ones who are really impacted. And that's the large portion of the business.
That's right, Nabila. And there's also some degree of mitigation possible where Indian companies find manufacturing outposts elsewhere, right? So there's some talk of garment exporters looking at factories in Vietnam and other, shall we say, lower cost economies where they can still do a bit of value addition to kind of escape the made in India tag, which is what's going to attract the highest tariffs. So I see some part of that also kicking in. And like you said, the Indian sense of resilience, or negatively often called jugaad, possibly can help us. And I just look beyond the dark clouds at some point when this tariff issue lifts. I think there's also going to be a reverse kick in terms of a huge boost to the economy.
Okay, all right. I'm really short on time. Dilip Cherian, I'll give you a 30-second window to give me a quick sense of now that Dilip Chanoy, I beg your pardon, now that exports have been impacted, is there another vertical that India can really capitalize on? Manufacturing?
No,
But
I think
then
first of
where are
all,
you sending it to?
manufacturing, yes. I think we can do that, and we have to really focus. Also, what's going to happen is a lot of the programs that are initiated last year and year before in terms of production-linked incentive schemes and all that stuff which we did here will now start kicking in because the investments will start coming and they'll start manufacturing, and those are not necessarily export products, therefore expanding scale and all domestically. So you're going to see the economy not being a dead economy like the president said, but actually a resilient economy and growing. So a lot of that effect is going to happen. But also to Shubhamoy's point, there are two types of workers, right? One is the temporary workers who are unorganized. So for them, we have to do direct benefit transfer. But for the organized sector who actually pay, EPF and all of that, the playbook was there in the Atmanirbhar package.
Okay,
The
so we're
government will
hoping
kick in
that's
and support
adopted
that.
and we're able to
You know,
adapt at the earliest. I apologize, we're really short on time. I really appreciate all of you joining us here today. Thank you.
thank you.
Quick break, we'll be right back. Stay with us.